The S&P 500 had a big bearish breakdown candle. Although we did get a kinetic rebound off of the 20 EMA line, it was very small. We still closed the session 0.075%, and that's really not good. So heading into tomorrow's trading session, unless we take out 560, unless we get above 560, I think this is setting the stage for more downside next week, where we would get a rebound, and the rebound could be towards, let's say, the even 558 area. If we continue to reject 558, I think this bearish rising wedge is going to sell off all the way down to the 530s area inside of the smart money zone, where we expect buyers to show up. So in the meantime, I would say that the S&P 500 is bearish. Let's take a look at what that particular pattern is real quick, team. All right, so here's a rising wedge example. And the way that the rising wedge plays out is we have something like this. You see very, very similar here. We have we pretty much the rising wedge is a bullish to bearish trend reversal found at the top of exhausted uptrends due for correction. Unlike the bullish channel, the chart pattern starts off wide and just tightens closer as the price trends higher until eventually price action gets very tight, narrowing inside of those two converging lines and triggers a large downside squeeze. So let's take a look at the S&P 500 and see how this is very similar to that rising wedge illustration here. So you see how we broke down there. And yes, after that breakdown, we did see some upside, but all of the upside was followed by more downside weakness. So once we do see that downside weakness and we see another big bearish supply candle, that is going to be our entry for all of the downside momentum that we are going to get off of that squeeze firing to the downside towards the 530s. So that's what I will be watching for on the S&P 500 here. And we can see, if we look at the S&P 500 sectors, the sectors that are leading the S&P are the ones that are concerning and that go up while the S&P 500 comes down. So definitely not good, team. Not good for the S&P 500. For bullish cases, I would like to see this big supply candle get taken out at 558 and bulls getting back up above 560. If we don't get back up above 560, we should anticipate the 20 EMA to lose support very, very soon, heading into next week below 552 and trigger this big downside towards 539, and then this gap fill at 536. And I think we wouldn't stop there. We would probably sell off all the way down to the 525 to 530 area, where we would possibly see demand reaction inside of this big smart money demand zone. So let me show you another illustration here for that smart money demand zone. So the smart money demand zone looks something like this, where you get a rally, you get a base, and then another rally, and what ends up happening is the rally fully sells off, coming back down inside of the demand zone, and right inside of the demand zone, that's where we look for a demand candle reversal at the retest of the zone as our buy entry. So once we do see that big demand zone come in, this big demand candle come in inside of the zone, that will be our buy entry on the S&P 500, where we will go long on the S&P. So until then, we have this bearish rising wedge, and I think we should be very, very careful and anticipating further downside to hit the markets. Let's go over and analyze QQQ. QQQ's tech sector is trading inside of this widening formation here. And yes, we did get a kinetic rebound. We did get a rebound off of that rising support trend line, but there was a lot of selling under the 20 EMA line. So heading into tomorrow's trading session, if we do get a rebound, or for the next, let's say for the next 2 to 3 trading sessions heading into Tuesday, if we do see a kinetic rebound and fill that gap and then show these big, I'll show you an example. Let's say we see these, let's take a look at some examples. We see wick candles. Okay, we are after wick candles. So what are wick candles exactly? These kind of candles. If we see these kind of candles where price action basically goes up and just continues to sell off, that will be very, very clear signal that the market will see more downside on the tech tech sector, on tech stocks, tech dominated portfolio, where we can sell off down to this gap fill at 467, breaking below this 474 support level and heading all the way towards this particular level, which I think will be the bottom for QQQ. So 442, I think, will be the main bottom for the QQQ tech sector, tech portfolio, and I think that's where buyers can step in heavy, because this is where the prior breakout level is. If I also draw this the zone here, that's a smart money zone right there. So that's where I think demand will be so overwhelming, where buyers will overwhelm the sellers. So until then, I think this TTM squeeze needs to fire to the downside. We can go back to the history. Whenever we see that the TTM squeeze is basically overheating, this means that it's overheating. When you see that, it means it's overheating and it's cooling off. So again, team, if we do sense more weakness around here, let's say for the next 2 days, we are trading in this range around here. Let's say we're trading around this range from 481 to 490s, and even, I would honest to God, even give it to 496. But what I think would happen is, like, I would anticipate these kind of candles to take place. If we go to 496, I would anticipate these kind of candles here. I'll show you. So let's say that we are seeing wicks like that after filling the gap or while heading towards the gap, and we're creating candles, reversal candles that look like this. That would be very, very bearish. Okay, so if we see stuff like that, where yes, we do get the rebound, right? We do get the rebound, but then the rebound will be followed with clear weakness candles like that, where we will see wicks just like we saw here. This would be a very, very, very clear signal that they're going to break the uptrending structure there, and they're going to head all the way down to this level at the 430s, 450s area, after breaking down from this particular support level at 474.31. So that's my anticipation on QQQ. And let's take a look at the Dow Jones Industrials. So here's the Dow Jones Industrials. The Dow Jones did set the ground for higher prices to come in the coming months. However, what I think is going to happen from here is we're going to go for a back test at this level of at that level of breakout, and then we will go back up, break that higher high structure at 413, and then see more upside in the upcoming weeks here for the Dow Jones Industrials. Now let's go cover IWM. IWM here also, we had an amazing put trade on IWM. One of our admins traded IWM, and our trader picked up the IWM here, the 215 put for August 16 expiration at 2.95, and she ended up making a really nice 30% off of this trade very, very fast. So if we do see more upside tomorrow, let's say IWM gets some upside, some lousy upside to 220, and 220 becomes a firm resistance level, then we can anticipate more downside towards this gap fill here at 210. 210 is where the previous breakout is, and that would be a great level where buyers can show up and bears can secure their profits on the trade that they're getting from the 220 rejection heading into tomorrow, as well as Monday's trading session. So if IWM continues to show more weakness in the upcoming sessions, I would anticipate more downside, which would further put strain on the S&P 500 to sell off on this rising wedge. Now, why do I believe this is such a high probability to get the sell-off? Well, let's take a look at how the market moves. The market moves in these higher high, higher low, higher high, and then you get another zone formation followed, and this means this is a form of price exception. So then you get another higher high, another higher low, and finally we are seeing another higher high there at 565 historic highs. So now we are looking for that potential higher low around the 530s so that we can buy it. And if the trend continues to be strong, we will target that level of resistance at 565 and then anticipate it to get broken out towards another higher high towards the 600s heading into the rest of this year. So that will happen on small and mid cap stocks pushing higher. So that's what I'm watching for on the S&P 500. And I hope this analysis helped you. I will continue to provide the daily price action show every day. I will come back with more updates heading into tomorrow's trading session. In the meantime, we have to observe price action and see how they're going to counter these big breakdowns that we have had in the last 2 days as well as today. So how are bulls going to counter those big reversals that we had in the last 2 days? Are we going to, let's say, print demand candles? Here's the bullish case, okay? If bulls step in and print a big demand candle like that, where they create a bullish engulfing, that would instantly get me back in the trade and be bullish for a move back up above 565 for more upside towards the 570s. If that doesn't happen and we don't get that bullish demand candle, and instead we see some lousy candles that failed to take out the 560 area, then I would anticipate further downside to come heading into next week to 539 and then 530 area on the S&P 500. Same with QQQ. So again, if we look at QQQ here, yes, the market can get a rebound. However, what I will look out for is how we will react around this level here. Are we going to get that kind of wick where let's say we go up, right? Let's say we get a rebound. Are we going to get some sort of wick candle like that where we go up and then just really reject back down, creating these big wick candles around here? Why am I looking for those wick candles? Because wick candles signal overwhelming supply, okay? This is where price action shows that bears were so overwhelming, they fully take out the whole buying bulls basically had. So if we do see some sort of rejection like that, we sense weakness. Even if we don't take over, even if we don't get above 488 and instead we show a lot of weakness, that would still tell me this would be a nice bear flag here for more downside to come towards this gap fill here at 467, and then a retest of this 455 to 450 area inside of this smart money zone where we anticipate buyers to show up. So let's take a look at what the smart money zone is one last time here. This is what the smart money zone looks like. You get a rally, you get a base, and then you get another rally. And that is followed by a big sell-off down to the prior demand zone, which we have highlighted here. And that's where buyers are going to show up with big wick reactions and even big demand candles, big green demand candles, signaling that they are coming back and pretty much resuming the uptrend, since we are still in the bull market in the bigger picture. So again, the TTM squeeze has not fired on QQQ, and this, when it does fire, can really trigger some heavy sell-off candles the way we saw here, especially the fact that now we are below the 20 EMA line, just as we saw here. Let's go back to SPY really quick. SPY also, you can see the TTM squeeze is very overbought, and it really needs to fire down, just like how we saw here when it was very overbought. It cooled off. Once all of this selling exhausts, that's when I'm going to get back in. Okay, team? You see how the selling exhausted around here? All of the selling exhausted after the TTM squeeze was fired. I'm looking for the same thing here around the 539 as well as the 530 level on the S&P 500. And that concludes my analysis for today for SPY, QQQ, DIA, as well as IWM. And I hope you have a wonderful rest of the day. See you all in tomorrow's price action analysis. Take care, traders.